Hello everybody, a very good evening here from Dubai, and I hope everyone is doing well. We have a very special stream today. This isn't a normal one. It's 11 p.m. at night on a Wednesday. It's 28th of January, and that means we have got the Federal Reserve interest rate decision. I am buzzing for this one because it's not only the first decision that we're going to get in January, but also we're going to hear from Jerome Powell, and we're going to find out what we're going to see with interest rates later on this year, which is going to be the big talking point in this stream, because we have got the decision in 5 minutes' time. I've deliberately come on only 10 minutes or 5 minutes before the decision because we are expecting the Federal Reserve to keep interest rates exactly where they are. So we will get some volatility in the next 5 minutes, okay? It's going to be fairly choppy, but the majority of the moves, the smart traders out there are going to be waiting for that Jerome Powell conference, which is in half an hour's time. And guess what? I'll be covering this live with you, like I did with Trump the other day. And we're going to listen to his language, and we're going to try and decipher from some trading opportunities for you in the next coming weeks or so. It's going to give me a nice idea of what I'm looking for heading into February, because from a trading point of view, for me personally, it's not been the best January. Last year was a fantastic January, and when Trump came out with tariffs, the strategies didn't perform too well. But this time around, I'm hoping that this is the end of it. So we're going to hear what Jerome Powell's going to say. Is this the last Jerome Powell conference we're going to hear as well? Because we know Trump wants him out. We know he wants to bring someone in who's going to cut interest rates. So we're going to be looking at the probabilities of interest rate cuts going forward. We're going to look at the economic statement. There's a lot to go through today. So I'm very much looking forward. Hello to everybody in the chat section as well. It's good to see everyone here on Discord. We're live on X. We're live on 3 YouTube channels as well. And it's very good to have you here with us on this on a late night for me. And I know a few of you in the Discord channel are up at 1 a.m., 2 a.m. and I appreciate the commitment to the cause. So hello to everyone in the chat section. As always, I will try and get through as many of the questions and comments as I can, but let me just say hello to everybody, or as many people as I can, because the chat's pretty crazy right now. We've got Dev Mikos, hello to you, sir. I hope you're doing well. Sir Dennis 999, hello to you. We've also got Yusuf on the stream. We've got Curtin, as always, on the stream. Hello to you, Curtin. I hope you're doing well, my friend. Nikhil, hello to you. Ali Owen, Ross Trades, Levi Trader 95. I'm trying to keep up with the chat, but it's going crazy. Thank you very much. KLIN VYB, hello to you, Mohammed. Good to see you as well. We've got Prota24. We've got Brett on the stream. Hello to you, Brett, my moderator on there. Yeah, please don't spam Wim, guys. Okay, the other thing that we need to talk about is, of course, the 100K giveaway that we're going to be giving away today. We're giving away 100K in Atmos funded challenges today. I'm not quite sure how I'm going to give them away yet. To be honest with you, I'm wondering, should I give away one 50K account in the mix, alongside the other smaller accounts? Or should I split it out a bit more? Should I do 10 10K accounts? Or should I do a 50K account, a 25K and a 10K and a couple of fives? What should we do? Let me know in the chat section what you'd prefer in terms of the accounts. And no, I'm not giving away instant funded accounts, unfortunately. Anyway, I don't trade instant funded because the rules are quite strict on there. I prefer to, if you've got a good strategy and it's working well, go for the two-phase. There's nothing wrong with that. Just reading some of the chat section. High quality of the stream. Hello to you, Alex. Thank you very much for the comment. I appreciate that. It's very dark here because it's late at night. We want live every single night and a trade too so we can pass the account. Yeah, we did call a fantastic trade last week on gold from the fair value gap and on silver. I know some of you managed to benefit from that, and hopefully I can do the same for you. Who knows? We'll try and get some good trades on. Manoj, hello to you. Good to see you. 12:45 a.m. in the morning for you. So I appreciate you coming on. 20K. Someone's asked. CS Simplified has said 20K, 5K accounts, please. No. 5 lots of 20K accounts. Okay, fair enough. Split it more, 10K each. All right then, fair enough. Looks like people are preferring smaller accounts split out over a longer period of time. All right, let's do that then. Maybe I'll add one 25K and the rest I'll do 10Ks and 5Ks. Let's do it something like that. All right then. And the way that's going to work, people, is all you have to do is turn up to the streams, be a subscriber to the YouTube channel, engage properly in the chat. No spamming, no commenting win, nothing like that. Check the description if you're unsure. This will put you into a live draw, which I draw after the stream. And then because it takes up time on the stream and I've got 3 channels on the go and it's just going to be a nightmare to do it all. So I do it after the stream. fully honest, transparent. I do it randomly. I always have done for those of you who watch me, and I'll provide the winners' usernames on YouTube inside the Discord channel on Atmos Funded and on Torex's Discord channel after the stream, about 10 minutes or so. So check the description below and make sure you're active in there to see if you want a prize. And good luck to everybody on that. Don't forget as well, if you are looking for Atmos Funded discounts, we can scan this QR code down the bottom here. That will give you some exclusive discounts that we've got running at the moment. We've only got 3 more days or so of our January promotion, so make sure you take full advantage of that. And if you want to follow me on any social medias, Instagram, TikTok, X, anything like that, then that will help the cause for the prizes. I'm joking, it doesn't make a difference, but it would help me, so I appreciate that. All right, 11 o'clock, what's the Fed done? We're missing it already. I'm just going to check the gold chart now. Has it moved too much? Probably not, because it's only the decision. What have we done, people? I can see gold spiking a little bit higher. I imagine they kept rates where they are, right? Let's have a look. Yeah, the Federal Reserve decided to keep rates at that 3.75% level. I'm not surprised when you look at the CME Fed Watch tool. 99% chance that was going to happen. That's why it's important that you don't just listen to what the decision's going to be, but actually we're going to be listening to the press conference and we're going to read the monetary policy statement in just a second. Why? Because we're trying to decipher whether we're going to see what the projection is for interest rates going forward in the rest of this year. Currently, as it stands, we're pricing in interest rate cuts from June. Okay? So that is quite far away, actually. And we're predicting interest rate cuts from June onwards throughout the end of the year. So there's a lot. There's room to go on either side here. Normally that's not the case. So I'm interested to see how Powell takes this. He's going to lose his job, isn't he? If he doesn't cut interest rates. So I wonder if he cracks under the pressure, if he gives in to what Trump wants. Who knows? Let's take a look at gold anyway, because we're just seeing some initial volatility off the decision. Look at that. Gold spikes up to. We had some initial volatility before it as well. Gold spikes up to 5295. Now he's making a move a little bit lower. I'm just going to try and see if we can get the monetary policy statement so we can take a read at that. Yes, we do have to wait 30 minutes, GRCH. However, it's going to be worth it because we're going to have a look at the charts. We're going to look at what the statement has said, and the conference from Powell is going to tell us a lot. Do I think the DXY is going to go down more? Yeah, I do actually. Why? Because Trump has literally said he doesn't mind the dollar being lower. Okay, he's literally said that having a weaker dollar is not a bad thing. It's a good thing, actually, is what he said. All right, so that spells more dollar downside in the long term. We just reached a 4-year low in the DXY. That's helped push gold prices even higher. Yes, it's not surprising that we see the DXY up 1% because we did hit it's spiking a bit higher now. We did hit a 4-year low. This is the daily time frame on the DXY. You can see we've created that bearish leg lower, right? This is our new leg lower. You can see that when I zoom out on the charts. All right, we've created another lower low. It wouldn't surprise me if we come back up to around 98, all right? And then I'm going to be selling it quite actively, to be honest with you. So, that's what I'm going to be looking to do. I do believe Trade With Us Fund we're going to see some more weaker dollar this year. But it won't be about its pullbacks, and it's about being patient. In terms of the mentorship, I'm getting some questions on the mentorship. Let me just answer that quickly before I move on to the statement because it's important. And I'll go back onto the gold chart so people can see exactly what's going on. That's the daily time frame on gold. Oh, man. What are we going to do, eh? On the mentorship side of things, thank you for the question on that. Look, I will be releasing it in the coming weeks, I believe. You got to remember, there's other things going on in the background. It's not just a case of like me getting my bit ready. You've got website, you've got emailing, you've got partnerships, all this sort of stuff. All the stuff that I don't know about. I know how to give you guys a good mentorship and a course and the EAs and the strategies and all that sort of stuff. But the logistics behind it takes a little bit more time, so just be a bit more patient on that. So it's not quite ready to launch yet, but my course is nearly completely edited as well. So I'm really looking forward to getting that. Let's just get in. Yeah, gold's not really doing much. I'm not interested in trading in the. It's 11 p.m. at night for me. This stream probably isn't necessarily for me to like find a trade right now. What this stream is going to do is help me decipher a trade maybe for tomorrow or heading into next week. Okay. Thank you very much for the comments on the mentorship. I appreciate that. Gold should fall and Bitcoin should fly, says Prashant. Yeah, gold's not really doing too much. Just see if I can find the Fed statement, just to see if there's any changes in the language from the last one. Remember, this is the first one of the year, so it might be slightly cautious. Here we go. Right. So what this does, this Fed statement, it's a tracker which basically shows the shift from dovish language to hawkish language or vice versa. So dovish language, we're talking about more interest rate cuts, we're talking about weaker dollar, we're talking about stronger gold, right? That would be in red that you see. When we're talking about more hawkish comments and we're talking about inflation's too high, the job market is stable, that sort of stuff, we're not going to cut rates too quickly, all this sort of stuff, we're going to take our time. That's more hawkish language, and that would feed into dollar upside, and that would feed into gold downside. The stock market is probably, I mean, it does have an effect on the stock market, don't get me wrong, but I would probably look more towards earnings and the strength and the health of the economy. Are we falling into recession, yes or no? Look, if you look at the statement here, I'm seeing a lot of green, which basically means that previously what was more dovish language has been replaced with slightly more hawkish language. So here, job gains have slowed this year, was been removed, and it now says remained low. And the unemployment rate, which previously this said before, it's edged up through September. More recent indicators are consistent with these developments. Inflation has moved up since earlier in the year. Now, the unemployment rate says it's shown some signs of stabilization. That's a difference. Previously, there was more concern about the jobs market, right? Now, when you fast forward to 28th of January, which is now, they've changed that language to show some signs of stabilization. That's more hawkish than before. Okay, that's interest rates probably being priced out further into the end of the year. Committee judges that reserve balances have declined to ample levels and will initiate voting for the monetary policy who prefer the lower target range of Federal Reserves by a quarter point. Okay, interesting. Not really any huge surprises for media. Oh, don't interested in that. So I would say overall, from what I see from the Fed statement, and we'll hear from Powell, and that's going to give us more of an inkling, I would say slightly leaning more to the hawkish side from what I read there. What does that mean, guys? That means potentially gold downside for today, and that means potentially dollar upside for today. That's how I'm seeing that, which sort of makes sense as well, because when we had Trump coming out last week, gold had moved so aggressively to the upside. However, we saw the gold market fall when Powell came out and Trump came out and spoke, which I wasn't expecting, but maybe that had already been priced in. So have we already seen that dollar upside for today? Are we going to see a correction? I'm leaning towards that, to be honest with you. What I quite like about this, yeah, is if you look at the daily high, is this the daily high? Yeah, from today, that's been taken, right? So if you want a trade idea, guys, this is your chance. That high has been taken. Let me just get rid of this. There we go, so you can see. It's the 4-hour time frame. We can see we've got some room here to fall. Even if we fell down into 5,120, by the way, fair value gap, this is the one that everyone was thankful to me for. I didn't give it out as necessarily a trade idea itself, but this was analysis we put on the stream last week, on Monday's stream actually. Beautiful fair value gap. Look at that, straight into it. Beautiful upside from there. When we go to the top of this range now, I look at the hourly time frame. We've grabbed the liquidity on the top side for you smart money concept traders out there. Yeah, there's the liquidity sweep. Now we've seen a reaction. Let's move to the 5-minute. Have we seen any shifts in structure? Potentially. This is our first initial sign. This is what I would call a change of character, should we say? Yeah, change of character. Is our first initial break in structure. Market moves lower, comes back up. Where does it move into? This fair value gap or imbalance, whatever you want to call it. I normally call this an imbalance. I'd call a fair value gap an actual physical gap in the market, but everyone calls it something different. So I wonder if this is going to hold as resistance. You know, this is we're seeing resistance at the previous low as well. I wouldn't trade this with I'm not trading anyway just yet, but if I was going to trade it, I'd have to probably cover. We might come up and hit the 50% of this fair value gap first. I would probably rather wait for the confirmation break of structure. If you trade this right now, one, you're guessing going into a conference from Powell, which could be quite volatile, depending on if he comes out swinging against Trump. And second of all, it's late in the day, for me anyway. And third, we haven't had the confirmation break in structure. So let's see how this plays out. What would be our confirmation break of structure? If we come and break this low now. This is the low that I want everyone to focus on. If we're going to get more downside in gold. If Powell comes out and backs up that statement that we've just read. That's what I'm looking for. Let me just see the chat, some of the chat section now. Amazing structure. Silver is pumping, is it really? Probably I should take a look at silver, shouldn't I? Is it? Doesn't look like it's pumping to me. Looks to me like silver potentially could be rolling over. Great setup. Thank you very much, Levi Trader. I appreciate that. Sardar, hello to you. I'm going in a demo on this trade. Good luck. Dev Mikos is very late over here. I know. I would just like to... yeah, I know it's late for a lot of people. I appreciate you staying up. BanGFX, don't forget to register and trade with Atmos funding, very reliable and affordable. Thank you very much for the kind comment there. So coming in, guys, from what you've just heard, from what I've just shown you in the statement, the Federal Reserve have kept rates where they are. Let's take a look at the CME Fed Watch tool. We've now got 84% chance that we don't cut rates again in March. A 70% chance that rates stay where they are in April. It isn't until we get to June that you see it's a bit more of a 50-50 split. So we're currently pricing in an interest rate cut in June. That's where we stand right now. That's what the markets have got priced in right now. So if Powell comes out and leans more hawkish, that percentage here that says 46%, that will lean more towards this side, yeah? i.e., it'll be more likely that we hold rates in June. Then the markets will reprice, and then we'll see gold downside, we'll see dollar upside. Initially, I'm not saying it's going to carry on. There's lots of other things that happen. I'm saying initially that's probably what will happen, yeah? And then you can potentially get trading opportunities from that next week. You see how I'm circling that whole story, right? From fundamental through to technical. Gold comes back up to the imbalance. And this is what I'm telling you. This is why I would never trade. Well, I wouldn't trade it before the Fed anyway. I never do. People who know me would know that. However, we're just trying to map out. We're trying to start to paint the story. If it doesn't work out like that, then as traders, we change. However, for now, as a scalping opportunity, let's just see if we get that confirmation break of this low. If we break this low here, then I would look for this, boom. So what I would actually like to see here, oh, sorry, I don't want a head and shoulders. I definitely don't want a head and shoulders. What I'd like to see here is some sort of order block be formed. We might even come up to this, if you class this as an order block, we might come up to here. If we can find an order block or a clear piece of imbalance from the next break of structure, that's when I would go, right, let's look for a short. Or we blast to the upside. Remember, this is counter trend stuff. Look at the daily time frame. Look at the weekly time frame. Do you really want to be selling gold right now? That's up to you. I'm not necessarily a scalper, and I don't go counter trend too much. Sorry, I've spoken about gold quite a lot, haven't I? What about the stock market? How has it reacted? Nothing. Why is the stock market not reacting? I'll tell you why. Because the stock market is waiting for the big tech earnings later on. After the bell, we've got... Oh, it's going to test my memory. Is it Microsoft and Tesla? I have to search it now. It's going to annoy me. If I've got that right, that's good knowledge. Yeah, it is, yeah. Microsoft, Tesla, and Meta are all releasing their earnings reports after the bell tonight. So if you're trading the stock market, be very careful, because you could wake up tomorrow with a big move, because these are obviously companies that have got massive weighting in these US indexes. Thursday, we've got Apple, just a small matter of Apple. So that's going to cause a lot of volatility as well. Let me just see some of the chat section. Well, please don't spam the chat, guys. Appreciate that. Oh. Well, no, Dev Mikos, my year bias. If I'm being honest with you, I think what might happen is we might see a little bit of a hawk. If you want me to just say what I think will happen, and things can change, so and I'm giving an educated guess here, is I would say that Powell's going to come out now and be slightly more hawkish because of inflation. That will price interest rates out a little bit further into the second half of the year. If Trump can oust Powell and get rid of him, he's going to bring in someone who's going to cut rates. That's a fact, right? Then the markets are going to go, we might have even seen some of that pricing in already, because Trump's pretty sure that in very, very soon that there's going to be a new Fed chair, a new Fed chair Powell. I said a new Fed chair Powell. Yeah, a new version of the man, but a lot more of a dovish version, because he believes, what does he call him? Too late Powell. I think that's what he calls him. I heard it today. Made me laugh. He calls him too slow Powell, something like that. So I don't think he's going to last much longer, but has he got the power to oust him? This is the $1 million question. What do you guys think in the chat? Do you think Powell's going to last the next 6 weeks, or do you think this is it? Because if you think this is it, there could be more opportunity coming for dollar downside and gold upside, because he's going to bring in someone who's going to cut interest rates instantly. He's just going to bring in a more dovish person. If he has the ability to be able to get rid of him, he's going to replace him with someone who's more dovish. He's already said that. But let me know in the chat section. Will Powell be here at the next conference? Yes or no? We've got 13 minutes left. Jose, hello, greetings from Colombia, Professor. Oh, I've been called a professor. I've not been called that many times. I don't understand English very well, but I do understand the diagram, so I can understand some of what you share. Thanks, mate. A big hug always. Jose, top man. Thank you very much. Unfortunately, I don't speak that language, but I appreciate it. Thank you. Why do I need to buy dry fruits? I've missed that. Nikhil doesn't think so. Sadhak thinks that Powell's still going to be here. I did tell you about the mentorship. It's going to be available on our Everything Trading website. I can show you the website now. It looks a little bit like this. If I go to the coaches room, you can start to see it's been let me log in. I'll show you. I'll give you a little sneak peek. There I am, look. Boom. Go to Connor's channel, so you'll be able to come and join me in my actual channel itself. Within my channel, you're going to see my upcoming live sessions. You're going to see my previous sessions. You're going to see my courses. You're going to be able to have a personal mentorship if you want to book one-to-ones. You're going to see my daily trade ideas. Potentially, I'm even going to generate trade ideas that come from my bots and my EAs. Potentially, I'm not sure. I don't know. But I'm looking at maybe having a copier set up if you wanted to copy the strategies trades. I don't know how that works with everything, so I'm just throwing out there. My P&L on the month January is about... Actually, I don't know yet. I know it's down because I know it is. I felt it. But I haven't put together my statistics report for each strategy yet. So Coda, you know who you are. I won't say your name. If you're watching, you got 3 days. You got 3 days to give me my... No, I'm joking. We'll put together the statistics report to have a look at the monthly performance of our strategy, but I know it's not been a pleasant month, that's for sure. And that's due to the volatility from Trump, and that's just due to natural drawdown, guys. Yeah? Anyone who tells you they're making, I know, they've got a 100% success rate, making money every single month, well, there'll be a trillionaire out in the Bahamas somewhere, and or they're lying to you. It's probably 95% that they're lying to you, because professional traders, trust me, have a lot of drawdown months. But, you know, I think my strategies last year, 6 months out of 12, were down. I've just had a trade being placed. I've just heard it. I don't know. Did you guys just hear that? Oh, God, what's it doing to me? Why is it trading now? Has it? I'm long gold. Brilliant. Thanks, strategy. I'm long gold from here. Oh, no. I probably should have turned that bot off, shouldn't I? Oh, well. Oh, I'm up $200, though. Do you know what? This account's not far away from breaching anyway, so I might just let it go. Or the field. Yeah, you know that sound, right? That sound just gave me some serious anxiety. No, I'm joking. It is what it is. It's placed the trade now, so, you know, we roll with it. It's my automated strategies. They place trades whenever they want, and I'm allowed to do news trading, so it's the nature of the beast. I didn't say hello to anybody who's watching me on X, by the way. I know we've got 100 people viewing us on X at the moment. Thank you very much. I appreciate that. Nice one. Why are you long there? Well, if I told you the logic, I'll be telling you my strategy, wouldn't I? And I'm not giving that away just yet. What size was it? Hang on a sec. It was a 0.5 lot size. I hate it. I hate the trade, to be honest. But to be honest, it's only 1% risk every time I trade. On my bots, it's 1% risk. Yeah. If it loses, it loses. I don't have opinions when my bot trades. I've already put my opinion into the bot. It's why it trades it for me. Be interested to see. Oh, no, I think we already saw some of this, so don't worry about that. Just want to quickly show you something, guys, which was interesting. Do you know gold rose 67% last year? And I was looking through the yearly performance of gold, yeah, in the last, God knows how many years. Do you know that's the best performance on gold since 1979? Gold in 1979, for anyone who's deep into their fundamentals would know, gold in 1979 rose to 126.5%. Right, and I'm looking. I can't see a figure close to 67% after that. 30%, 29. Look what happened around the global financial crisis, in the lead up to the global financial crisis, to 23% and 29%. 2024 was 27%. 2025 was 67%. Have we got a recession coming? Have we got a recession coming? Is that a sign? Because something's happening, isn't it? Why are we seeing so many flows into gold? Could it be that there's a 2008 style crash coming? Is that our warning sign? I wouldn't rule it out, but what I would say is the jobs data hasn't supported that just yet. Yes, it's weakened, but it hasn't supported it just yet. Now, I'm going to say one thing. I don't think gold will reach 3K ever. Probably not. No, I can't see it. Yeah. What's gold risen this month? This month alone, I'm gonna have to scroll. Jeez. Sorry about all the drawings and stuff, but I've got a lot of analysis on there. January takes us back. Let's just go back to the Friday the 2nd of January then. Here. Do you know gold has risen 23% this month? If you put that into a yearly performance on here, it's not too dissimilar to some of the best years we've ever seen in 1 month, the first month of the year. Some people in the chat will probably tell me something is happening. I don't disagree with that too much, to be honest with you, because that's crazy stuff, to be honest with you. Look what happened during... you can't really say the same thing for the dot-com bubble, really. But definitely the 2008 crash, the lead up to the global financial crisis, we saw gold spike quite a lot. Sorry, I was rambling on a bit more. 5 minutes to go until the decision. Can I stop on gold? Yeah, I probably should. Let's have a look at Bitcoin then. What's Bitcoin done since for me, Bitcoin looks dangerously... still looks dangerously vulnerable to the downside, if I'm being honest, because of the same analysis. I'll talk through it again. There's our leg lower. Here's our low volume pullback. Very small candles, not really much happening, not much momentum to the upside, probably not much volume in these candles. Then we get the breakdown below the trend line. We get the retest here. And now we're hovering dangerously below this trend line, below this 90,000 mark. I'm wondering whether we're going to see the next wave lower. And I think the next wave lower would probably take us to 80k. That would be my prediction for Bitcoin. In my course, there will be fundamental analysis as well. I'm sorry that your eyes are closing. Is it me boring you, or is it just that it's late? Yeah, we do see... I think I see X questions on there, Curtin. I believe I do. If I don't, I apologise. My restream should give me X comments, but I don't know if anyone's said anything. No idea. Odan in the chat has gone against me and says, I believe that Bitcoin is going to 100k. Yeah, gold is going a bit lower here, some about 0.4% down. That is what it is. Someone in the chat is called Atmos321. Thank you. Can we sell gold now? I'm leaning towards gold downside in terms of like my opinion, if that helps. It doesn't really help that my bot's gone long, but that's just the nature of the beast. I'm not really too fast. I'm in the trade now. Once I place the trade, that's the risk that's set, and we move on. Let's just hope that Mr. Powell pumps gold for us. I just can't see him coming out and being that dovish, to be honest. How long we got? 3 minutes to go. Where's the best place to watch it, other than here, of course? Probably here, I guess. Oh, no, I don't want to listen to that guy. I'll probably listen to it here at Associated Press. When he goes live, I'll tune it. I'll go on that. Or CNN, maybe. Why is it? Oh, this must be from before. Yeah. He's not come on yet. Why is this guy rambling on with questions? He's not come on yet. I'll find a good place to watch it. Don't worry. Maybe Bloomberg. Where do you reckon, guys? Where do you reckon is the best place to cover it? Bloomberg might be the best one. Yeah, let's listen to Bloomberg, shall we? There's 2,000 people watching Bloomberg. I'm confident that one day I'll have that amount of people watching our streams. Yeah, I will increase the screen display. Don't worry. When he comes on, I will put it onto full screen for you. All right. Okay. Any last requests? Dollar yen's taken an absolute battering as well, but it's up 1% today. I told you to look out for dollar yen upside. I can't believe that the yen's going to stay that strong. This happens with the yen quite a lot. It grinds, as in like dollar yen. It grinds higher and higher and higher and higher and higher and higher, as in the yen gets weaker and weaker and weaker and weaker. Then there's a massive load of profit taking. The Bank of Japan are going to be hawkish all of a sudden when they're not, right? And then we see the dip being bought into. I wouldn't be surprised if the same thing happens here, to be honest with you. Come on, gold. Give me something. To be fair, I've got a plan here. If my upside doesn't work on the bot, my stop loss is actually at this low. So that would mean that we're probably going to see a break of this low, and then we can look for a retracement to potentially go short. So I'm actually not too sad about being long here. Oh, here we go. Oh, sorry. Let's get him on.
The question everyone is asking, will the market crash?
Rest of the public not benefiting from this tech boom?
Well, the challenge, of course, is that the AI boom has been the main driver for so long. But if you implement policies, of course,
see that okay, yeah?
says that we want fewer goods and fewer people to come into the country, the risk is that, of course, does come deglobalization
stuff is a bit
with
ruined,
a risk of
but
high inflation, risk of high inflation in
Can
prices,
you hear it okay, guys?
risk of high inflation in wages.
Bit higher?
So that's why this is not only the US, this is also Europe, this is also across the OECD area. You're seeing more and more segmentation of the global economy. Of course, results in now everything needs to be produced domestically, home shoring, onshoring, reshoring. All that, of course, results for fixed income investors in more upside risk to inflation.
Did you just describe
Here we go.
the 1930s in the United Kingdom?
Tom, the biggest risk to the GDP growth we've discussed over the last 12 months are the populist remedies the White House might introduce to try and correct the K. One of those issues we've talked about for the last few months, the last month or so, has been the introduction of a cap on interest rates on credit cards. That could have the complete opposite intended effect of chilling financial conditions.
Cheers, Grant. Appreciate that, mate.
Credit availability.
I didn't want to be in this trade. I didn't. I really didn't.
TK, they're the kind of things they're thinking about.
I think the phrase is grasping at straws. I don't hear much policy or science behind it. Maybe we'll hear that in these comments.
Torsten, this just in from Hugh Van
Come on,
Steenis
pal.
of Oliver Wyman. I'm sure you know him. He wants us to start a podcast. I wants to know if Mark Rowan will give up Torsten once a week so we can do a little podcast together.
Oh,
he
no,
I'm
likes the
drinking,
last hour so much.
First guest.
I just played football before I came on the stream. This is like my
once a week. Can you write a check if we've got a budget on this
electrolyte style
event?
Yeah, I
drink.
can work it out.
We'll try and make that happen. Torsten, this was a
Or
pleasure.
no,
Thank you,
it's
sir.
vodka.
Torsten Slok there of
Joking,
Apollo.
joking.
This could be a snoozer over the next 60 minutes. The last 60 minutes has been anything but. Equities right now very close to all-time highs on the S&P 500.
Close to all-time highs on the S&P. Here he is.
1%. For the
Coming
chairman
in,
of the
Mr.
Federal
Powell.
Reserve, let's take a listen. Down in Washington, D.C.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing.
That's
While job
hawkish.
gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated.
That's hawkish.
In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate.
Gold's gone,
to
right?
promote
I know it
progress
is.
toward
I can feel
both
it.
our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter.
This is quite hawkish.
In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal.
Is inflation...
Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs.
Gold not
In
fell
contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation
I see S&P
goal.
500.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks.
S&P 500 is falling,
Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis.
It's not doing anything.
To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal.
I'm in a trade, yeah.
Longer-term inflation expectations.
I'm long gold. Yeah,
our success
I didn't say to sell.
I just matters to all Americans.
That's what I thought.
We at the Fed will continue to do our job.
But I'm long it. I'm long gold. But it's not doing anything.
Deep commitment to serve the American people. Thank you. I look forward to your questions.
Here we go. Question time. Do you reckon he's going to get questions about like whether he's getting sacked or not?
Chris Rugaber at Associated Press. Thank you.
Yeah, nothing special. You're right, Yusuf. Nothing special.
You attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps...
Go the distance with Forex.com. The discipline, training,
and
focus. It's all paying off.
And as I thought about it, I thought might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting
I thought his speech was
jobs.
There's nothing really I've taken from it that much.
Pace.
Slightly more hawkish.
So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized?
Gold's pumping a bit, yeah.
So, yeah,
not
really
out the
two
woods
questions.
yet, though.
One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there.
I'm sleepy as well. Chelsea are on in 20 minutes.
The statement. Let me pull it
I want to watch the football.
Was simply...
Come on, pal. Come on, sleepy pal.
Judges that downside
Give us
risks
something.
to employment rose in recent months. So we
Current
saw
profit?
data coming in, which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has improved, clearly improved, since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons,
as you can
we
see,
thought we would take that
I'm on
language out of the statement.
92K, so I'm minus 8%. That's the January I've had.
Tim Rose, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today on
Taxis
I'm
dropped, the
simply gonna
DXY's
refer
dropping
you
though.
to the statement that I made
That's
on
the dollar
January 11th.
index.
I'm not going to expand on it or repeat it.
Dropping
So,
quite heavy.
I'm just not going to. This is really
Prop firm,
about the
Banji. I
press
trade on prop
conference
firms.
and,
Well, I trade a bit of
the
both,
economy,
but mainly
what we
prop
did
firms.
today, and some ancillary areas. But I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
Come
I
on,
have
Gold,
nothing
get
for
up.
you on that today.
Mike.
Michael McKee from Bloomberg Radio TV. Have you made
it won't hit my
whether you
TP
would
tonight.
Remain
My
as
TP
a
is,
governor of the Federal Reserve?
5384.
So would you tell us what it is?
I doubt
if
it's
not,
we
when
won't hit
might
that tonight.
We anticipate
'Cause
a decision.
I think
No.
he's probably going to close the
and,
trade soon because
I
my
really,
session
once
ends.
again,
So
have nothing for you on that.
maybe I
today.
get 0.5% out of
That
it.
either.
Take that.
Why would you want to leave it all under the circumstances?
Yeah, I agree. AFAC
Again.
XD it is risky. Yeah.
I don't want to get into this. It's not something I'm. There's a time and place for these questions, and
He's
but not something
He's
I'm gonna be
getting
into
absolutely
today.
pelted
Thank you.
with questions about the Trump, whether he's going to be there, Supreme Court, all this
Claire
sort of
Jones,
stuff.
Financial
He's not
Times.
getting any
Thanks a lot
questions about
for
interest
taking
rates.
my questions. In another one that might, lead
Give
to a
it a
similar
try.
answer.
Why are they asking him? He's not
We've
going to
seen
answer
quite
it.
big movements in the dollar over recent days. What do you think is driving the US currency lower?
Trump.
And have you been at all concerned
You
just by
can't
the
say it.
extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So, I have nothing for you.
But what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has
they've ruined this.
Their role.
Because they're not asking him any questions about future interest rate policies. All about just
and some other things.
the
but we don't-
dollar
we don't
and
comment on
Trump
the dollar.
and
Sorry.
Supreme Court, and it's just what's the point? He's not going to answer it. So why'd you ask it?
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggesting that this year
Grinding higher, guys. Grinding
starts
higher.
off on a
slow
solid
one,
footing
but we're grinding.
for growth. Inflation performed
I
about
agree
as
with that,
expected, and as I
Gertrude.
mentioned, some of the
I
labor
agree with
market
that.
data came in
Nikhil,
suggesting,
I'm nearly
we're
going to call it
evidence
a
of
night.
stabilization. So it's overall
I've got Chelsea
a
kicking off in
stronger
15
forecast,
minutes. I'm
if
tired.
really-
It's nearly
if that's
midnight.
your question.
Ask
I'm
him a
not sure
question
I
about
answered
interest
the
rates. Do you know what I mean?
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace.
Up we go.
The unemployment
Up we
rate
go.
has been broadly stable, and inflation remains somewhat elevated.
I have no problem
So
sharing
we'll
my
be
trades.
looking to
I always
goal
do.
variables
I
and
told you I
letting
didn't
the
have. I haven't had a
data
good
light the way for
January.
us.
I don't care. It's part of the process.
Steve Leisman, CNBC, and sticking with questions you might answer. Thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the SEP and the longer run rates,
Yeah,
16 of 19 officials are actually below
we
there
do
on
indeed.
their long run.
I know.
Is the
Yeah,
Fed
I
still
don't know who's
in a
got Fulham, Man
process of
United,
bringing
yeah?
it down towards a middle range of
tired.
neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range
Dollars
of
picking
plausible
up.
estimates. This is the
Taking
higher
out
end
the
of
low.
that range, but it's in. So for some
Taking
people,
out
they
the
think
FOMC,
it's
taking
neutral.
out the low, and
I
it's
think,
heading higher now.
and many of my colleagues
Euro
think
dollar
it's
might be
hard
a
to
good
look at
sell.
the incoming data and say that policy's
Say pound dollar.
significantly restrictive
Take
at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course, no one knows
M93
with any precision.
Congratulations. He called the gold
so,
upside. Well done.
If you had a follow-up.
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually.
I like
over
dollar yen
time. Are you
upside
still
here,
in that
guys.
mode,
We're
or is
heading
this
into the
a
Asia session
place
not
to
too
hang
long.
out?
Yeah, no,
I really
would
like
say,
dollar
if you
yen
look at the
upside.
SEP from December, most people had additional normalization.
We still got the gap
but at
to
the same
fill,
time, we've
sort of.
done a lot of the process of normalizing. A good piece of it is
155.5
done with 75 basis
dollar
points,
yen
and
could be
before
a good
that,
target.
100. It's 175 basis points we've cut since we began cutting in
Thank you,
September
Barack.
of 2024.
I'm up
So you
500.
moved
I'm up
now to,
$600.
3 points.
0.6%.
Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy
I like
performs,
stock
look
market
at the
upside
data.
here as well. I've not really
We're
heard
not
anything
making decisions about
that's
future
stock market
meetings, but we
downside.
do think we're well positioned after those 3 cuts to let the data speak to us.
Amira. Thank you, Chair Powell. Amira
Powell
Robley
is
from
boring
Bloomberg News.
sometimes.
To what extent did the
Sorry, but-
committee discuss the possibility
To
of
be
cutting
fair,
at this
that's probably a
meeting
bit
or in
harsh 'cause
March?
he,
And how are you all
he hasn't
thinking
had
about
good
the
questions.
conditions that would merit another rate cut? Is there
Here we
broad
go.
agreement on the committee about what it would take?
Here we go.
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but the committee pretty broadly for
Some people wanted to
holding
cut
today.
rates in there.
We're not trying to
committee.
articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned.
Alex, always. Anyone who
as
tells
we
you
make
they're winning
decisions
every
meeting by
month, they're
meeting,
not real
looking at the
traders, trust me.
incoming data,
Everyone has
evolving outlook
drawdown
and all
months.
that.
Well, professional
And,
traders do.
We're in a position where
I had
we have
$15,000 in
some tension
payouts
between
from October to
employment
beginning of
and
December.
inflation, but it's less than
Yeah?
it was. I think the upside
So
risks
I made
to
my payouts there. So
inflation
it
and the
more than
downside
pays for any
risks
prop
have
firms'
probably both
challenges that I
diminished a
blow
bit.
this year.
So
We'll be I'm playing with house
It's
money
about
now.
how you weigh the risks to the 2 goals and how big those and quantify them. And so there are different views on the committee, and we'll find our way forward as the data evolve.
Very data dependent from Mr. Powell.
Thank you, Mr. Chairman.
Shock.
Edward Lawrence from Fox Business.
US 30
Has
down,
the
yeah?
effects of tariffs already moved through the economy on prices?
If I
A
was
lot of it has.
trading
So
this manually personally, I'd be
basically,
looking for some stock market upside.
There are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs
I think
are
I'm
likely
in the
to
clear
move
on gold.
through and be a
If we
one-time
break
price
through
increase.
this,
So most of the overshoot, if you
surprise zone.
were to take that out, you'd get, and you would, inflation.
Yeah, Grant,
core
I
PCE
wouldn't
inflation is
trade
running just a
euro
bit above
yen
2%
now. No,
X
don't do
the
that.
effects of tariffs on
There's no
goods.
point. It won't
And
be
the
doing much.
Other good news
probably.
is, if you
It's
look
an
away
awful
from
pair
goods
as
and look
well.
at services, you do see ongoing disinflation in all the categories.
Here
of
we go,
services.
gold. Up to
So that's a
$1,000.
healthy
Here we go,
development.
1 to
So that's
1.
what's going on. The expectation is
Stop losses
that
now at break even.
we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases.
Daniel, I'll do the
that are
giveaways.
begun.
I'm going to come off the stream
And
in a
that's what we
second,
expect
all right?
to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing,
it's going to humble me now.
The downside risk.
Here we go, up we go, up we go.
The data just get worse. We'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition
Last
period
question
look
I'm
like?
going to listen to.
I don't have anything for you on that.
Yeah,
I don't have anything. That will depend on Congress's actions and things I can't speculate on.
Oh, poor pal. Do you know what? I just want to end and just say that he gets a lot of stick. But when you think about it, he hiked interest rates at a pace that's not been seen before, right? He's managed to bring inflation down while at the same time, at the moment, unemployment and the labour market, considering how high or how aggressively hiked rates were, the jobs market isn't doing that badly, right? So I don't actually think he's done a bad job. I don't really understand all the criticism that he gets, in my opinion. Anyway, thank you very much, everybody, for listening to that. I apologise that it wasn't quite what I was looking for. The questions that he got at the start were just my summary of it was a slightly more hawkish statement. He come out and the statement was back that up, sort of. It wasn't like made it crazily hawkish, but we're sort of in the same position we were before, which is fine. That happens sometimes. Remember, this is the start of the year, so they're not going to come out and say some crazy stuff. The questions that he got didn't really help spark any volatility because a lot of it was geared around the... my screen's going to turn off. A lot of it was geared around... the politics behind it, which is not really what I'm interested in. I don't get involved in politics, and it doesn't help trading. So it was a little bit of a non-event in a way, but still we got some things from it, and we'll take that into our next trading. You know, it just goes to show as well, like I wouldn't have bought gold off of the back of that, especially how much it had come. But I'm now sitting here plus $1,100 on my funded, right? And stop loss will be at break even. It's going to close in a second. So I could have nicked a nice 1% off that, and I didn't even press a button. So it just goes to show sometimes that you can have an opinion on something, but it is important to trust your edge and trust your strategy. But listen, I appreciate everybody who decided to tune in. I know it's late for some people. It's nearly midnight now. Chelsea are playing in 10 minutes' time. Champions League for anyone who watches football. So I'm going to head off now and watch that because it's been a long day for me. Listen, thank you very much for those who tuned in. I will announce the winners in the Discord channel in about 10 minutes' time. I will send a message in the announcements. I probably won't reply for the rest of tonight, if I'm being honest, but I promise you I will. I'll make sure I get those accounts credited for you within 24 hours of when I reply to you. It doesn't take long normally. Chat, thank you very much. I will see you all for my next stream, which is going to be on Monday. I'll schedule that soon and let you know and share the link with you. Come and join me. It'll be a new month, hopefully a more improved month in terms of my performance. But we move on, and yeah, I'll just leave you with that. All right. Thank you very much. Take care, and I'll see you all soon. Thank you.